Hey everybody, CB3 here with another live update. It is Tuesday, February 18th. Hope you all had a great President's Day holiday. We did here. So much going on in the market. S&P near lifetime highs, Trump levying tariffs all over the planet, and all kinds of Doge issues to talk about today. CB3 Live Update begins now. So the S&P futures are up about 0.25% overnight. I think that means we're going to be at a new lifetime high Tuesday morning when the market opens after a 3-day break. What does that mean for us? It means that the market continues to have strength. It keeps finding buyers. And for us that have been involved and invested all this time, our accounts are going to continue to grow. The Nasdaq's actually been up by more than 1.5 points in the last 4 days. But what's really getting the attention of everybody are these tariffs. Now, in my show last Thursday, I hope you saw it. If you didn't, go watch it now. Terrified of the market, or are you tariff-ied of what Trump is doing and therefore saying, I can't be in the market now, it's just too risky? Well, if it's too risky, you need to tell the Nasdaq and S&P that, because both of them are pushing new highs this week. That's a great thing to see. So even with Marco Rubio going to Saudi Arabia, speaking with Putin, trying to shut down a war and not even involving Europe and Ukraine in the negotiations, that just seems crazy. These sorts of geopolitical events are happening literally almost on a daily basis. But the most important takeaway for us is it doesn't seem to be affecting the markets. The day of last week's show, the tariffs that Trump was going to levy, he delayed, which we got a bump from the next day in the market. And then I think we got it overseas on Monday. Remember, the overseas markets don't close for President's Day. We got a bump overseas in that. And I think, again, as I said earlier, this is going to carry through into tomorrow. I'll have another show midweek and we'll talk about what actually has happened. But right now, Meta, M-E-T-A, that's the old Facebook, and Amazon are currently outperforming the S&P by a lot. And that's what's driving the Magnificent Seven. We need the Magnificent Seven, or at least several of them, preferably at least 4, to drive prices higher for the rest of the market, because so much of this is based on sentiment from investors, is driven by consumer sentiment in America and people's spending patterns. So what are people concerned about? They're concerned about inflation. The CPI report, which was out last Wednesday, I talked about this on my Thursday show. I think I've hawked that enough for you guys to go back and watch it. Okay, we did see a spike. Do I think it's a dangerous spike? I do not. I think that if we can reduce the debt of this country by what is happening with Elon Musk and the Doge group, we can see inflation go down simply because our debt payments are going to be reduced by the end of the year, and significantly so this time next year. So the markets, I think, in general are responding positively to Trump's tariffs, or his tariff announcements, which for the most part are simply a negotiating tool, other than the 10%, which really did get levied on China. The rest of the tariffs have really just been bravado and position squaring, trying to get a better deal for America. This is what he was elected to do. And like it or not, reducing costs in Washington with needless spending and overstaffing should be something all Americans are excited to see. So the obvious question is, what's going to drive the market this week? It's a shortened week, only 4 trading days, of course, because of the President's Day holiday. But what's going to drive it? Well, trade and inflation is what's going to drive it, and earnings season. So we've reported on 60% of the S&P 500, and they have been a pretty good group of expectations. More than 3/4 have exceeded expectations. If that trend continues and we finish with a really strong earnings season for the fourth quarter of 24, that bodes very well heading into the second quarter of this year, where we will start reporting on the first quarter of this year for the market. And I think that's where we are right now. So the FOMC, that's the Federal Open Market Committee, has a meeting scheduled later this month. They're going to be talking. And other than that, we're just basically hanging in week after week, trading your accounts the very best that we can, given the data that we have, with all the surprises that are coming out of Washington. I hope this was interesting for you. We have had several people that have said we want to hear more about how you select stocks. So we will be producing a YouTube show which is highlighting the last last 8 or 9 minutes of my show last Thursday. And we'll see if that is something that you guys benefit from. I'll go into further explanation on how our stock selection and our risk management strategies help maximize your risk-adjusted potential profits for your trading accounts. Until the next time, hang in there. God bless you guys. Thanks for listening. We'll see you next time.